Hello everyone. Welcome back to the live stream. Live screen, whatever you want to call it. Yeah, it's about 6 minutes to 3. Market will close in a little over an hour, so yeah, I'm tardy getting the stream. Excuse me, start back up again. But I've been watching the Russell most of the session today. It's been looking pretty strong. It is not the strongest, but it's close. Actually, in the cash markets, it's pretty much a dead heat. In the futures, I think you could say it's a little bit more spread out. I mean, in the futures, actually, the Russell is the laggard, and actually, now I think about it, it's the laggard in the cash markets too. But overall, I mean, just this bullishness has been lifting everything to the point where it was pushing through to new highs. Before lunch, the high was here, and you can see it traded down, and it's been trading up, pushing new highs. I wasn't trading a lot of this. I traded some of it. I'm tempted now to trade it to the short side because there is some pretty big slowdown in momentum, and to the point where we're actually seeing a reversal of momentum. If I pull the time frames, the stochastic time frames up here, you can see it on the 1 hour chart. The 4 hour chart is still stronger. But we got a bearish stochastic crossover here just now, confirmed on the Russell, so I'm going to short from here if it will just let me and not be so nitpicky about how I do my orders. I did get confirmation on this 4-minute chart, but I didn't get on the tick chart, although it's close. Hasn't been, a tremendous amount of volume. It's felt like a lower volume day today. And I don't know if I like the way this is acting right off the bat. Okay, I did not like that at all. This is actually looking like it's going to be more of a, I think that was a bear trap, really, because starting to see this crossover form here and some softening. I don't know if I want to say softening, but little bit more of a significant reversal in momentum. So what looked like momentum to the downside is now actually reversing. And it started to turn after it hit this high. So after in this bar, which I traded, I didn't trade it all the way up to 1601.80. I wish I had, but I traded these 2 bars here, I think. And it was after it hit this high that it started to reverse, started to lose some momentum. And that's natural after a big push up. You know, some traders take profits. But if there's still, you know, bullish interest, if there's still buying interest, which if it's enough to keep it from going down, obviously in this case it looks right now like it is, then, you know, though anything that looks like a stochastic reversal or any kind of a momentum reversal is going to be short-lived. So unfortunately, you can't rely on the indicators 100%. They're a good indicator of what's going on. They do not predict the future. They tell you what's happened in the past, but to an extent they tell you what is currently going on. At the end of the day, you have to pick the indicators. I use plural there because there is no one indicator. I like stochastic crossovers as an entry signal. I like to use on the histogram. I like to use the actual stochastic, the plot, when the fast stochastic hits overbought or oversold, depending on what direction I'm going. You know, that's for me is an exit signal, because when that happens, that's usually when momentum starts to slow down. And you know, you don't want to see this. You got this big profit from this trade, and now it starts to trickle away from you. I prefer just to lock those in. I'm not going to allow a lot of risk on this trade. Concerned because now it's starting to lose momentum in the other direction. So now this is like a whipsaw. And like I said, I don't want to take a lot of risk on this trade because we still have an hour to go. There's really a lot of time left in this session, but that's good. Now we're starting to see some strength. one good thing, one thing I'm happy with is my trading has been fairly efficient today. I think that I've been more careful today about getting into higher confidence trades, which is something that you should always be doing. You should always be looking for the highest odds of profit, the highest odds of success. Okay, that's like I said, I didn't want to take a lot of risk. I didn't, could this turn around? Yeah, it could. But then I didn't like what I was seeing develop here either. And granted, these are still forming, but it's not a good sign. This big shot down, that was really the kicker for me. And it doesn't mean it's a short necessarily, because you still got this trend line to contend with. Now, break below this trend line, that might be something, although you still have this moving average. So that might not necessarily give you a whole lot of blue ocean. But right now we're not quite halfway, but we're between support or resistance lines. This is R2, which is now support. It was resistance, but it broke through. This is R3. This here, it's about halfway, right about here is about halfway between these two. We're close to half, not exactly, we're close. But honestly, this could go either way. Now if you look at the Dow, I wouldn't necessarily say it's a better short. But well, I mean, there's a trend line here that got broken. So you got a trend line here that has a little bit more history to it. That it's traded really sideways for right now. It's traded sideways through that. I mean, yeah, you could draw this, but that's kind of cheating too. I don't know if it's cheating, but so there is actually, if you look at this, there is something to be said for considering a short on the Dow. Maybe a small one, like for 10 ticks or something. The NASDAQ right now is our strongest contender. NASDAQ futures. Here's what's interesting about the NASDAQ is it's right here. This is an all-time high. Okay, it's already beat its all-time high. That was set on the 26th. That high was 70.34. This is about 80 points higher. So that channel that it's pushing here was the channel, remember, that I started drawing from the gap down on Tuesday afternoon when the futures opened for the overnight session. And it's one that I've been constantly adjusting. Because to me, I think that was a critical day because it signaled a really strong gap down or gap up, depending upon what security you're talking about, but then a wicked reversal. That reversal was meaningful. That was a real sea change for these markets. So I gotta tell you, I like this as a buy right now. Probably getting into it a little bit early. And this is the one, I'm the guy that just got done saying I don't want to take too much risk with so much time left in the day. The way it's acting, I mean, it's looking like it's going to respect this trend line. Yeah, it traded below it, closed below, but then it closed above. Moved into the next bar, and the next bar is rising. So it's making a move for this, 71.14. That's 12 ticks. No, not quite that many. 8 ticks. And here's 2 o'clock. So if continues to abide this trend line, then it's going to be about here. So 71.21. There we go, hitting new highs. I'm calling my shot right here. In other words, that's what I think it's going to trade up to before it peters out. For now, it's still 45 minutes to go. But on this run, today just feels like a day that's going to melt up into the close. And honestly, I don't have any logical way of explaining why I think that is. It's not like I'm seeing something on the chart. It's just from having observed what the Russell was doing and what the NASDAQ is doing now. If I look at volume profile, it's really, yeah, kind of weird looking. You know, big dent here. This is the point of control. A lot of volume up here up top. So it's kind of crowded up here. It may be this kind of high volume area that's like pulling price action back down. There we go. Study. Now time profile shows a different story. Whereas volume is skewed up here, time spent is skewed down here. So there's a lot of time spent down here, and then the time spent, see how it's spread out over the whole day, like all this price? This is very shallow. And you got your volume point of control here, you got your time point of control here, so there's not congruence. A lot of times you like to see congruence because that means that point of control has meaning, okay? So, I mean, despite the softness in momentum, we saw it hit a new high, pull back, that was in this bar, pull back down to this trend line, and really kind of slowly moving back and forth, but staying above the trend line. Now I'm talking about the orange trend line here. Which this is your reference point that's anchored right there. So right now, it's like price is wedged between these two lines. Not so much here because it was still above the trend line. But we drew that trend line starting here to that reference point. So kind of what we needed to do is just sort of move sideways right now. Like get to a point here where, okay, now I got a little bit more room to breathe. I mean, that's not to say it couldn't break above. Again, it can. I told myself I was going to add to that on strength, and I didn't. I should have added on weakness, actually. Just about half an hour to go. It's 28 and 20 seconds after the hour. Oh, there we go. Now we're seeing a nice push. See, these bulls, they just want a chance to rest. Now, the thing is, though, you got to keep going because you haven't hit my target yet. Almost. There we go. And it even blew through it. So I'm going to talk about an aspect of trading psychology, and it's about letting opportunities come to you rather than chasing opportunities. And there are a lot of investors and traders that chase price, and they wind up paying for it in the long run. When you chase price, it usually means that you're going to get caught. You're going to be opening your position at the very top of the move if you're going long, or at the very bottom of the move if you're going to short a position, because you're chasing price either up or down because you see that momentum. But as you can see, momentum isn't something that just, it's a steady, sustained thing. It comes in these bursts. And, you know, if you had chased this and you kept trailing your limit order up to get it, oh, finally I got filled. Oh, guess what? Now it's losing momentum, and now you're sitting on a loss. In this case, it's moving back up again, so that's okay. But you know, the chances of it going much higher before it does a sideways move, and a very frustrating sideways move, is pretty high. Now, the thing is that you can't always predict where things are going to go, but you can have a general idea. So, I mean, ideally, I would have put a buy order here and then put my sell order here, right? But I'm not that good. No one's that good. But it did come pretty close to this trend line. It also came pretty close to this moving average here. So if you put a limit order there to buy, which I understand I didn't do this, but this thought just kind of hit my, hit me, and I wanted to talk about it while it was on my mind, about letting the market come to you. You put your order in here and you have a stop once you get filled. Let's say you decide that that if it trades, if you get filled here and it trades down, if it starts pushing that Bollinger Band down, you were wrong. That's where you get out. You quantify, okay, that's how many ticks of risk. So if I put an order in here at 71.25, right? Let's say I put it down here. Let's say it's 71.07.25. Okay? That's 12 ticks, if I'm calculating that right. So, did I say it? Yeah, 12 ticks. So 3 points, there's 4 ticks to a point. $5, that's a $60 risk. But if you did that, and you said, I'm willing to take $60 of risk because I am going to make $160 in profit, that's a good risk reward, and that is a good risk reward. The point is, though, you go ahead and put your orders in, and you just let the market come to your orders. Don't chase it. We all have a tendency like, oh God, finally I'm sitting on some profit today. I'm gonna take my chips off the table, and then you watch it run another 10, 15, 20 ticks, and you could have had all that upside. It doesn't always work out that way, but a lot of times it does. But that's a discipline. You're letting the market come to you. Another way I've heard it put is that the way you make money in the market is you pay attention, and when you see money lying around, you just pick it up before somebody else does. What does that mean? Setups. Okay? This was a setup right here. We know that this is an established trend line. We saw that it was, moving a lot. We knew that there was going to be some back and forth. We saw that it was either going to trade, back and forth through here till the end of the day, or it was going to break up above, which is what it wound up doing. What if it comes down here to this trend line or this moving average? So you put your order in and you get filled. Well, guess what? That money was just lying around. You just picked it up. That's an example of what I'm talking about. Because nobody else is necessarily paying attention. They may be so tunnel vision, they may be so myopic, that they're not seeing this aspect of it. And basically, they're stepping over quarters to pick up nickels, is what they're doing. Or they're stepping over dollar bills to pick up dimes, You don't want to do that. You don't want to be that person. I don't know if I hit my goal today. I hope I did. Almost. I'm almost there. So yeah, this is kind of like I thought. This is a market that it felt to me like a market that was going to melt up into the close. I think there's a lot of trader sentiment, investor sentiment is pretty high right now. It seems like there's a lot of positives. It's about 20 minutes till. The last 15 minutes of the session tend to be the most volatile, so watch this. This is going to peter out in the next 5 minutes. And there may be another opportunity to buy here. Now what happens if I'm wrong? I miss it. I don't get filled. I don't get in. I don't get the trade. But I'd probably rather. You can't lose money that you didn't put on the table. You know, I'd rather not buy here and then have it go down there without a stop, and then okay, now I've just given all that back. Yeah, I mean, this is just going gangbusters. The NASDAQ 100 index is up 1.8%. Volatility is down significantly. It's below 15 on the VIX. It's below 17 on the RVX. They're both down, you know, around 11%. I mean, the VIX down 11.5. The RVX down 10.75%. Yields up 1% on the 10-year. The index for the 10-year Treasury yield is up. It was up 1.1, I think, this morning, about a 2.896 or 7, something like that. It's really close to 2.9. Because money was rolling out of bonds. Bonds are selling off, so yields are rising, and chasing stocks, chasing equities. Now really, Honestly, I don't think you see it dip below that. But if I'm wrong, it comes to about here. I don't know, excuse me, if this is believable yet. It's now 3:46. So we are now in what I like to call the most volatile, besides the opening, right? The most volatile part of the day, especially on a Friday. Everybody wants to square up for the weekend. You know, everybody's trying to squeeze that last dollar out. You know, want to show a profitable result for the day, profitable result for the week. Oh, wait, hold on. Thing, come on. Do it right. $113. Nope. Yeah, see now if I just put my order in there. About 5.5 minutes to go. Okay. Keeps making that effort. Maybe this is the one that will take it home. Stretch. Just keep stretching. Keep on stretching. Just keep on pushing. A little less than 3 minutes to go. Okay, hit new highs again. Two minutes. So I got out at, we'll see, where did I get out? Filled at 71.2250. So here. I was hoping for a little higher, but I didn't want it to, this time of day, I didn't want it to rip against me too quickly. "45 seconds. 10 seconds. Ding ding. So that's the end of the regular session, but not the future session. Future session trades for another 15 minutes, then takes a 15-minute break at 4:15, resumes at 4:30, and stops at 5 for the weekend, and then it resumes again. You see that big rip down? That's why I don't trade. That's why I don't like trading after the closing bell, especially on a Friday. Because usually you see big counter moves. So if the market melts up into the close in the futures, you see a big counter move, a lot of profit taking. Oh, well, I was saying, then on Sunday, futures open back up again at 6 Eastern. Now keep in mind, daylight savings time is this weekend, so don't forget to set your clocks forward, I think. Forward, yeah, because Arizona doesn't change, so we'll be 3 hours behind the East Coast. But it still happens at 6 o'clock Eastern. So, which is normally 4 o'clock my time, which is 4 o'clock my time in the winter, but it'll be 3 o'clock this coming Sunday for me, because now I'll be the same time as Pacific time. So, what a day. The Dow up 440. The NASDAQ 100 up 134 and change. The composite up 132, almost 133. The S&P up almost 50, 47.56. The Russell up 25. Russell was the laggard, but it was still up a respectable 1.6%. The NASDAQ 100 was the leader, 1.93% gain. Then the composite 1.79%. The Dow Jones 1.77%. The S&P 1.74%. Volatility got crushed today. Dollar down 6 basis points, so not a lot. Gold actually closed up. It was down earlier, but it's up 16 basis points. Crude oil up 3%. Very interesting day today. So the S&P is not at its all-time high, but it is knocking on the door of this recent high. Oops. So if it trades above that on Monday, this week I think it's going to retake the high. That's assuming no negative headlines. You know, Kim Jong-un decides to renege on his promise to discuss nuclear deregulate or denuclearization, or Trump announces that he's increasing the aluminum and steel tariffs to 50%, and Canada and Mexico are no longer exempted. These are obviously ridiculous examples, but negative headlines like that could, uh, obviously change the equation here. Dow Jones has a little bit more of a ways to go. It's a lot closer on the S&P. NDX is already above its high. So now, really, it's, this price channel. And actually, let's see. want to draw Fibonacci extension. It's close enough. Whoops. Zoom in here. So target next week is there. This is the 38.2. It's a major. That's one of your that's one of your key levels in your Fibonacci. So I expect it to trade up here by Friday. Oh no, that wouldn't be Friday. That would be the next week. So we'll see. I mean, this is an area that's probably going to bounce off of. I mean, most likely because you've got the midpoint of the price channel, which it's been below since August of 2015. It's been trading in the lower part of this price channel. Now, if we get if we just get crazy momentum and it shoots above there, well then, hey, you know, now you're looking at going to, you know, 8,000 by the summer, probably. These are just guesses. I mean, I wouldn't trade on this, but these are just wild guesses. That's the NDX. The Russell, we already looked at the Dow Jones, we looked at the S&P. Let's look at the RUT. Russell is close to hitting its own all-time high. Set on the 24th. So I think the RUT takes its high next week. The Dow Jones, maybe. Can't even type. And the S&P, I think definitely does take its high next week. Or comes pretty close. So anyway, that's going to do it, folks. I'm going to turn off the stream. Thanks for tuning in. Have a great weekend, and look out for the Traders Espresso Weekend Edition, both written and video. I've been doing one or the other, just in the interest of time. I've been doing one or the other this week, but the Weekend Edition is one I can do both a written and a video. So look out for that, and see you on Monday.